regards to the last question was around sort of what does Keith mean when he says the toughest comps are November and December, and that's really around the big sales and EPS numbers that that the S&P sort of put up in late 2021. And now we're trying to comp those. So there's a great slide from the Q4 deck. So that was slide 113, Eric. And I'll kind of walk through this process and kind of, just visually show you what that looks like, right? So the red numbers or the red kind of conditional formatting is actually sort of positive or bigger numbers, right? So that's why the comps are hard to get. So if you kind of go down to Eric, do you mind kind of zooming in a little bit on sort of just years 2021 to 2022? So like the far right hand side there. Yeah, perfect. So basically, if you kind of look at some of those numbers, so that bottom box there, that's the line, so the 40, call it 46% in Q1 21, 87% in Q2 21. And now they're starting to sort of decline into the back half of 2021, and certainly have continued from a rate of change standpoint, move lower for the first half of 2022. And those numbers are now kind of starting to roll in, right? So when he's talking about the comps, and that line item is the S&P 500 earnings growth. And so those numbers today, right? The S&P about 421 companies out of 500 on the S&P have reported, plus 10.65% sales growth and a plus 3.25% earnings growth. So again, but, so that's almost, not, it's a good chunk of the S&P, but at the same time, the XLE component itself is plus about 160, I think it was, in terms of actual kind of like earnings growth. So it's, so it's big numbers. So you also kind of got to understand what some of the underlying components there as to what's, propping up the general S&P 500. And then kind of as you look in under the hood, and this is something that is provided on the macro show deck every day. The team updates that, and you can see the underlying sectors and what those kind of earnings and sales and numbers look like. But that's kind of the big component here is terms of the comps, right? So when he's saying that there's still really hard comps in Q4 in terms of November, December, this is exactly what he's talking about, and this is what we're kind of paying attention to, and this is one of the reasons why Keith keeps reiterating the fact that there is a quad 4, profit recession or profit decline that's going to continue to happen here, and we're just getting the Q3 numbers now. So that's kind of that component. But then I also want to kind of touch base on the on slide 114. I think it's from the same deck actually. So this is just sort of the, I guess, summarization of what basically, how profits are unlikely that they're going to be going higher, right? So I'll just kind of let you kind of read that read that slide, but then also on the far right there, it's pretty clear that we're going from very, very large rate of change, growth numbers from an EPS standpoint to what are going back towards certainly low single digits. That's what we're reporting here in Q3 of around just north of 3% to possibly negative numbers as we head into the first half of 2023. And then just along those lines as well, and just to kind of keep pushing or kind of reiterating this point, Eric, if we can pull up the slide 109 and 110 from the Q4 themes deck as well. There you go. Awesome. So this is the last time that we had consecutive quad 4s. And so this was the 2001 kind of cycle analogy or what have you, right? So if you kind of look at the, again, and Eric, I'm sorry to kind of be directing you here, but if we can zoom in on kind of the box on the top right, it's going to give a little bit more of a breakdown, a little bit easier to see. Yeah, awesome, man. So there you can kind of see what those sales and EPS growth numbers were, right, during that time frame. And if you just scooch down just a hair, Eric, I think we might be able to still see. Yeah, there you go. Perfect. So during that time frame, so from Q4 of 2000 to Q4 of 2001, the NASDAQ, for instance, was down an aggregate of minus 54%, right? But from a sales growth and EPS growth, you saw those numbers go from positive 16, about 15 and 16.5% down to negative numbers of double digit teens in terms of earnings growth growth and single digit sales growth losses, right? And so that's the interesting part here, and it's very, we call it a similar setup that we're potentially gonna see here as we go back in, and we're just at the crux of that phase in terms of sort of Q3, call it the equivalent of kind of like Q101. So Q3 of 2022 is sort of that first step down where we're still positive, but but obviously the rate of change is declining. And interestingly enough, from that slide as well, you can see that there was continued, negative returns beyond just those quad 4 environments, right? So even though those quad 4, technically changed on the map, if you kind of go out, so the 3 lines above the aggregate from that red line, those are the years of January 2000. So the year 2000, the year 2001, and the year 2002. So it's quite interesting, and I just really wanted to point that out in terms of when coach is saying it's the toughest comps are here and are basically upon us, but that really doesn't necessarily mean that like the end is here, or as we pivot outside of a quad 4, 4 consecutive quad 4s, we're just going to have to continue to follow the signal and determine kind of what, and have it guide us as to our portfolio construction, because even if we have kind of potentially different quad environment on the map, it might not directly correlate with traditional back tested exposures. So again, just trying to kind of bring it full circle here in terms of, not only the toughest comps, but also, that the signal kind of trumps the quads. And it's going to be a very interesting environment that we're going to be continuing to go into over the next, few quarters.